All right, let's get right into it. You know, the way we think about money, the way we use it, it's changing, and it's changing faster than ever. But what if I told you the next huge shift isn't coming from some tech startup in Silicon Valley? What if it's coming from the very institutions that print the cash in your wallet? Yep, we're talking about central banks, and we're going to be digging into something called central bank digital currencies, or CBDCs.
So just let that sink in for a moment. What if the cash in your wallet wasn't paper anymore? What if it was just digital? And I'm not talking about your bank balance on an app. I mean the actual official currency from the government just existing as data. This might sound like something out of a sci-fi movie, but trust me, it's not. This is a real financial revolution, and it's happening as we speak.
So you might be asking, why are we even talking about this? Why now? Well, it all boils down to one big thing. Physical cash is, well, it's kind of disappearing. We're all part of this huge shift to digital payments, right? And that's creating this massive empty space, this vacuum in the financial system.
Okay, so check out this number, -20%. Now, that might not look like much, but what it represents is, honestly, a seismic shift. Think about it. In just the last 5 years, the use of actual, physical cash for payments around the world has dropped by a whopping 20 percentage points. And a change that big, that fast, it doesn't just happen without leaving a huge gap.
It creates one. And they say nature abhors a vacuum. Well, so does finance. So with cash on the decline, the door has just swung wide open for all sorts of private innovation. We're talking about everything from Bitcoin, of course, to the thousands of different stablecoins out there. Those are the cryptos that try to keep their value stable by linking themselves to something like the US dollar.
In this quote from the University of Florida Law Review, it just hits the nail on the head. It says, cryptocurrencies have again triggered intense debate over who should control money in the future. See, this isn't just about cool new tech. This is about power. It's a fundamental struggle for control. The rise of all this private money is forcing a question that governments simply cannot ignore. In this new digital age, who's in charge of the money?
This brings us to the official response. Faced with this challenge from the private sector, central banks have decided to step into the ring themselves. And their answer, their solution, is the central bank digital currency, the CBDC. So what on earth is it? Let's break it down. In the simplest terms, a CBDC is basically a digital dollar bill, or a digital euro. It's super important to know this is not the money that's in your normal bank account. That money, it's technically an IOU from your commercial bank. A CBDC is totally different. It would be a direct claim on the central bank itself. Think of it as the safest possible digital money you could own.
This table really lays it all out. For your bank account, the issuer is a private bank. For Bitcoin, a decentralized network. But for a CBDC, it's the central bank, and its value is stable because, well, it is the national currency. But here's the real kicker: legal tender. A shop can say no thanks to your crypto, but with a CBDC, they would have to accept it. It's got the finality of cash, but in a digital form.
And let's be clear, this is not just some sleepy academic debate. Oh no, this is a full-blown, high-stakes, global race, and the outcome is going to have massive implications for the entire international financial system. Get this, we're talking about over 100 countries. 100! That's almost the entire global economy. They are all, right now, either exploring, actively developing, or in some cases already piloting a CBDC. You've got the sand dollar in the Bahamas, China's massive digital yuan pilots, the US and Europe are deep into their own research. This is happening literally everywhere.
So why the big rush? Well, there are a few big reasons. First, they want to push back against private currencies. They can't have things like stablecoins threatening their control over the economy. Second, they see a chance to upgrade the plumbing of the financial system, make payments faster and cheaper. And then there's the big one, geopolitics. This is about power on the world stage, a digital dollar versus a digital euro. It's about making sure your currency stays on top.
But, as we start talking about digitizing the very foundation of money, we hit a wall. And that wall is maybe the single biggest, most important question in all of this. What about our privacy?
It really comes down to this simple trade-off. Cash is anonymous. You buy a coffee with a $5 bill, nobody knows but you and the barista. There's no data trail. Digital currency, totally different world. By its very nature, it's traceable. Every single transaction could, potentially, be logged and recorded. So right there, you have this massive, unavoidable conflict. the convenience of digital versus the privacy we get with physical cash.
And look, this isn't just some abstract idea. It could be a total deal breaker for people. A fascinating study showed that when they surveyed people, giving them assurances about privacy controls made them way more likely to want to use a CBDC. The takeaway here is absolutely crystal clear. If a CBDC is going to work, people have to trust it, period.
Okay, so let's play this out. Imagine these CBDCs start launching all over the world. What happens then? What does that actually do to the market? How does it change the entire financial system as we know it?
Well, the potential impact is just massive. It could be a total game changer. So step one, the government introduces this perfectly safe, risk-free digital currency. What happens next is what economists call a crowding out effect. Just think about it. Why would you keep your money in a private stablecoin that has some risk when you can hold the official 100% safe version? And just like that, you've got public money, maybe even wiping out private money. This also puts incredible pressure on regular banks. If people start moving their deposits into CBDCs, it could totally upend their entire business model.
And hey, don't just take it from me. Listen to what the central bankers themselves are saying. The deputy governor of India's central bank was incredibly blunt about it. He said a CBDC would kill whatever little case there could be for cryptocurrencies. I mean, you can't get much clearer than that, right? The logic is simple. If you can hold an official digital dollar, why on earth would you ever need a private stablecoin that just tries to imitate it?
So all of this, it brings us to one final huge question. Is this whole CBDC thing just the next natural step for money? You know, we went from shells to coins to paper. Is code just the next stop on the line? Or is it something else entirely? A revolution in control, giving governments an unprecedented level of insight into every single transaction we make. How we answer that question is going to define our financial world for generations.
This is not financial advice.